Most indicators promise to predict the market, but they all lie, they lag, they confuse. And worst of all, they make you think you're ahead when you're already late. But what if I told you there's one indicator that actually predicts price direction before it happens? After years of testing every so-called secret weapon, I finally found one that doesn't just follow price, it calculates where it's mathematically forced to go next. It's brutally precise. It filters out noise with 3 powerful layers of confirmation. And it might just be the last indicator you'll ever need. In this video, I'm pulling back the curtain on this tool, called the Voss Predictor, showing you the exact settings and revealing the strategy traders are using to win big, even in unpredictable markets. So grab a seat and stay with me till the end, because what you're about to learn could be the turning point in your trading journey. Now, to get started with this indicator, you first of all head over to TradingView and load up whatever trading instrument you're interested in, your favorite stock or crypto pair. Then click on the Indicators button at the top, and in the search box, type in the Voss Predictor, a peek into the future. You're looking for the one that was published by Immortal Freedom. Go ahead and click on that to add it to your chart. Once you've added the indicator to your chart, you might be tempted to ask what makes this tool so powerful? Now, the reason the indicator is so powerful is because it's built on the mathematical foundations of John Ehler's work. The Voss predictive filter doesn't just react, it actually calculates where price is likely to move next using wave patterns and momentum cycles. It brings together 3 mathematical concepts: John Ehler's 2-pole bandpass filter, the Voss predictive filter, and correlation metrics, all working in sync to forecast price movement with incredible precision. So, here on the chart, you will notice several key components working together. This color-changing line here, that's your Voss predictive filter. When it's green, it's forecasting upward price action. When it's red, it's predicting downward movement. Then there's this white line, known as the bandpass filter. It filters out the market noise and focuses only on significant price patterns. Between those lines, you'll see color-filled zones. Green zones point to bullish continuation. Red zones signal bearish pressure. Now here's where it gets even more interesting. Notice those tiny dots along the center line? They're not just visual decorations, they're real-time momentum calculations. These dots measure both direction and the strength of market pressure. Brighter green dots signal strong bullish momentum, while brighter red dots show intense bearish pressure. These change in real time, giving you a continuous stream of market sentiment data. To maximize accuracy, let's fine-tune the settings. Here on the input, you are going to set the bandwidth period to 30 and the bandwidth to 0.25. These values optimize the mathematical relationship between the predictive filter and the bandpass filter for most market conditions. The strategy is simple but highly effective. When the green predictive line crosses above the white bandpass line, it signals a potential bullish move. A cross below indicates a bearish move. The reason why we need the second layer is for momentum confirmation. Even if the prediction is spot on, it won't work without the market's strength to follow through. That's why those momentum dots are critical. They tell you whether the move has real force behind it or not. The dots display direction and strength. Green means bullish pressure, and the brighter the dot, the stronger the momentum. Red means bearish pressure, and brighter red means more intense selling force. But there's one rule that changes everything and filters out nearly 60% of the false signals most retail traders fall for. Only take bullish crossovers when the momentum dots are green. That confirms the predicted move has momentum backing it. The same rule applies in reverse. Only take bearish crossovers when the dots are red. If the dots don't match the direction of the crossover, ignore the signal. And brightness matters. Brighter dots are stronger and suitable for bigger trades, while duller dots suggest weak momentum, better for smaller or test trades. But even the perfect prediction and strong momentum are meaningless if you're trading against the trend. That's why the third layer is so important. Trend alignment. Most failed trades happen when short-term signals clash with the broader market trend. So we add a trend filter to stay aligned with the bigger picture. For that, we'll use the Super Trend indicator. You're going to click on this Indicators tab and search for Super Trend, and then add this one. That was created by Everget. So the Super Trend indicator uses ATR, the average true range, to create adaptive support and resistance levels that respond to market volatility. When the super trend is green, you're in an uptrend. When it's red, you're in a downtrend. These dynamic levels are way more effective than static support resistance zones because they adjust in real time as volatility shifts. Now, to fine-tune super trend for this system, just double-click the indicator. And on this input section, you will set the ATR period to 35. This smooths out the daily market noise while still responding to weekly trend shifts. Then you will leave this ATR multiplier to its default setting of 3. That strikes the perfect balance, avoiding false signals but still catching real trend reversals. Now, follow this rule. Only take long signals when the super trend is green but gives a buy signal, and short signals when the super trend is red and also gave sell signal. This one filter alone eliminates most losing trades by keeping you aligned with the market's overall direction. Think of each of these 3 layers as filters. The Voss predictive line calculates probable price direction. The momentum dots confirm the strength behind that prediction. And the super trend keeps you aligned with the overall trend. When all 3 align, you're looking at the highest probability setups available. Let's walk through a long trade example, so you will have to wait for the Voss predictive line to cross above the bandpass filter. And then you confirm that momentum dots are bright green. This means that bullish pressure is building. Make sure the super trend is green and also gave a buy signal, and that the market trend is upward. Once all these confirmations align, you will enter your long position at market price. Set your stop loss just below the recent swing low, and aim for a 2-to-1 risk-to-reward profit target. Now you can see that this was valid trade opportunity. Now for short trades, watch for the Voss line to cross below the bandpass line, and then look for bright red momentum dots, which means strong bearish pressure. Then confirm that the super trend is red and also gave a sell signal, and that the trend is downward as well. Once you've got all these confirmations, enter short at market price. Set your stop loss just above the recent swing high and target 1.5 times your risk. As you can see, this trade was a profitable one. The strategies shown here are based purely on technical indicators. Always back up your trades with your own price action analysis, fundamentals, or whatever other tools you trust. This is just one piece of the puzzle, not the whole game plan. This broker right here is one of the best Forex brokers in the Forex industry that offers both Forex and synthetic pairs. If you want to trade correctly and not miss any market move, this is the right Forex broker for you. So click on the link in the description of this video to register with the Derive Forex broker and trade efficiently. Go ahead and join our Telegram channel and get access to high-quality expert-curated trade signals every single week. But that's just the beginning. For those who want even more, our VIP signal channel delivers the most premium signals with even higher accuracy and more frequent trade opportunities. Don't settle for average trades. Join a community that wins consistently. So, click on the link in the description below to join now and start capitalizing on the market like a pro. If you found value in this breakdown, do me a favor. Hit that like button and subscribe to the channel. Your support helps us to keep sharing these advanced trading insights on YouTube. Still have questions? Drop them in the comments and I'll personally help you out. And stay tuned. I've got another powerful concept coming up in the next video to take your trading even further. Until then, trade smart, stay disciplined, and keep learning.